I think people are going to have to feel more comfortable that their job is more stable, the roof over their head is stable, they can take care of their family.
The head of the New York Stock Exchange, Duncan Niederauer, says investor confidence will come once we have consumer confidence.
And at the New York Stock Exchange, a show of investor confidence, for today at least. The blue chips rack up a triple-digit gain, powered higher by the nation's factories kicking into higher gear. You're watching Nightly Business Report for Monday, January 4th.
This is Nightly Business Report with Susie Garib and Tom Hudson. Nightly Business Report is made possible by...
Investing takes perspective. It comes from navigating up and down markets for 60 years, spotting opportunities at home and abroad. Global investing from Franklin Templeton Investments. Gain from our perspective.
I've been growing algae for 35 years. Most people try to get rid of algae, and we're trying to grow it. The algae are very beautiful. They come in blue or red, golden, green. Algae could be converted into biofuels that we could someday run our cars on. And using algae to form biofuels, we're not competing with the food supply. And they absorb CO2, so they help solve the greenhouse problem as well. We're making a big commitment to finding out just how much algae can help to meet the fuel demands of the world.
This program is made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Wall Street kicked off 2010 with a rally. The Dow surged over 155 points, the Nasdaq rose 39, and the S&P 500 jumped nearly 18.
Susie, it was a heck of a run the first trading day. Good economic news triggered the buying. Investors encouraged by an upbeat report from the Institute of Supply Management showing those factory orders ramping up, jobs ramping up, and prices finally starting to head up as well.
And comforting comments from Fed Chief Bernanke yesterday also helped, implying there's no hurry to raise interest rates, at least for now. UBS strategist Mike Ryan expects stocks to continue to move higher from here.
The market, I think, is moving in anticipation of several events. They're moving in anticipation of what they believe will be a moderate but sustainable economic recovery. They're moving in anticipation of an earnings recovery that should have earnings returning towards trend, not immediately, but slowly returning towards trend, and also an environment that remains fairly benign from an inflation standpoint.
The head of the New York Stock Exchange told me he's also optimistic about the stock market in 2010. I talked to Duncan Niederauer right after the opening bell rang here at the big board, and I asked him for his market forecast.
I think we're in such a better place than we were a year ago that it's hard not to be optimistic. So I'm very constructive about where the market should go from here. We look at our IPO pipeline, it's pretty solid. I think you've got corporate earnings continuing to grow, and I think you've got a lot of the uncertainty that was really prevailing at this time last year is out of the way. So I'm pretty optimistic for 2010.
But Duncan, I've been talking to a lot of market strategists and even traders right here on the floor, and they're talking about a correction for 2010.
Yeah, I happen to not agree. It's easy to predict a correction because we're up. The Dow's up 60% since March. S&P's up more than that. Nasdaq's up 80% since March. The indices are all up a lot, so I think it's right to expect a correction. The market feels fairly valued to me. It doesn't feel overvalued. I think people are going to be much more focused on the economy because I think corporate earnings are going to deliver the goods this year.
I'm sure you get asked this a lot by individual investors. Is it safe for me to put my money in the stock market? Because, you know, everybody is still afraid about putting their money in stocks these days. What is it going to take to restore investor confidence?
I think it's about how they feel as a consumer first. So I'm going to be watching the consumer confidence metrics and how the economic recovery is going in 2010, because I think that's what people are now going to focus their attention on. So I think people are going to have to feel more comfortable that their job is more stable, the roof over their head is stable, they can take care of their family, and then I think it's a necessary, that's a necessary step to take before we're going to have people feel better and come back to the equity markets on the retail side.
Let's talk a little bit about financial regulatory reform. The American public is looking to Congress to pass new rules that hopefully will prevent the financial system from breaking down in the future. What do you like the most? What don't you like?
I think a lot of what you're going to see from the SEC is directionally correct. It's going to be a lot around market structure. I don't know if it's necessarily going to be in the category of preventing a crisis. I think the best thing that's been talked about is on the OTC derivative space, more central clearing, more transparency. The thing I'm most worried about on the regulatory side is this talk of a transaction tax, which I think would have very, very negative implications for volumes and for the cost of trading for retail investors.
And this transaction tax would be on trades of stocks and options and futures. Is that tax really just going to be passed on to investors?
That's my view. I'm actually writing a piece right now that I'm going to be distributing in the next couple of weeks. And among the points I make is, one, the point you just made, Susie, which is it's absolutely a pass-through tax. This idea, the way it's been packaged, to sell it to Main Street, that it's a tax on Wall Street. It is not a tax on Wall Street. It is a tax on Main Street. It will flow down to the retail investor. It will flow down to the mutual fund holder. It is not going to be paid for by Wall Street.
Duncan, how do you rate President Obama's performance in terms of his position on things like banks, financial reform, executive compensation?
I would sum it up this way. We've been very pleased with the words that he and the Treasury Secretary have spoken. We've given them kudos for the measures they appear to be ready to take. I think now in 2010, the proof is in the pudding. Are they actually going to carry out what they say they're going to do and follow through?
What do you think the president needs to do in 2010 that will restore confidence in American businesses and the markets?
What the president needs to do is what he started to do a few weeks ago, which is call the banks in together and say, crisis averted, you guys are well on the road to recovery, your profitability shows that, please start lending to small and medium-sized institutions. And from our vantage point, the credit market is still predominantly closed to small and medium-sized enterprises, and we think it's critical that he apply pressure in the right places to get that credit flowing freely again.
You mentioned earlier about IPOs. There's a lot of buzz about a flurry of IPOs, and the NYSE and the NASDAQ are lobbying hard to get those listings. How much of it will come your way?
We operate in a very competitive environment for the listings. We win more than our fair share. We have, and I'm very confident we'll continue to do so. The pipeline we've got coming in the next few months dramatically tilted our way, so we're pretty excited about it.
This first trading week of the year, we're talking to the leaders of the nation's big exchanges. On Wednesday, Craig Donohue, CEO of the CME Group in Chicago. And then on Thursday, Robert Greifeld, CEO of the NASDAQ OMX. Tom?
Well, Susie, some of the other big stories tonight, putting away the hammers and the nails at building sites in November. We've seen a drop-off in both home building and commercial projects, leading to a 0.6% drop in construction spending. This is the 7th straight month on the downside. Swiss drug maker Novartis is eyeing complete control of eye care company Alcon. Today, Novartis announcing plans to take over Alcon, paying Nestle nearly $39 billion for the 77% stake in Alcon that Nestle owns. Some good and some bad in what Bank of America's new CEO Brian Moynihan sees for the future. Forecasters at the bank predict the U.S. economy will grow more than 3% this year, but that slow pace also means the unemployment rate will stay high. And watch out above. How about this? The world's tallest skyscraper now open in Dubai, 2,717 feet. The Burj Khalifa is named for the leader of the neighboring Abu Dhabi, which just pitched in $10 billion to bail Dubai out of its financial crisis.
An evolution of thinking for the Fed chairman. That's how political economist Tom Gallagher today characterized this weekend's remarks we told you about from Fed Chairman Ben Bernanke. Bernanke said low interest rates were not to blame for the housing crisis. A lack of regulation was. Stephanie Dew spoke with Gallagher about the message the Fed chairman delivered.
Bernanke said that sometimes the Fed should use interest rate policy to address bubbles. Do you see the Fed making a move to address emerging markets or commodities?
That is a change on Bernanke's part. He was very much a part of the Greenspan-led consensus on how monetary policy was to approach bubbles, which is to say the monetary policy shouldn't adjust for bubbles at all until it was time to pick up the pieces. Now I think the central banking community is moving toward a view that central banks should be worried about the development of asset bubbles. Primarily, though, the regulation is the preferred approach, but there are some circumstances circumstances in which monetary policy can play a role. So that does reflect a bit of an evolution of his thinking along with the rest of the central banking community during the course of this bubble, this boom-bust cycle. So I think that has been a shift on his part.
Bernanke says that low interest rates weren't the reason for the housing bubble. Do you see that as a defense of the Greenspan Fed or a defense of the current Fed?
Well, given that he was there during most of that time period, it was really a defense of the Fed and his own role in it, I think. And I think that he's on pretty good grounds in arguing that that monetary policy was not a main reason for the housing bubble. He defended the Fed's record by pointing to a defensible calculation on where the Fed funds rate should be and said it wasn't very far from that. And he was really responding to a lot of criticism that the Fed had unusually low interest rates for a long period of time, and that's what fed the housing bubble. Instead, he presented some calculations that suggested that it was the development of alternative mortgages that produced very low initial monthly payments, and that system is what led to the housing bubble, as both the borrower and the lender believed that home prices would continue to rise and they would never have to pay the higher mortgage payments that would be due later on.
Now, Bernanke's faced a lot of criticism as he's gone before the Senate to keep his job. Do you think he'll be an effective advocate for reform?
Well, I don't think the views of the Fed chairman are an especially important part of the outcome of this debate. There's a lot of interest groups that are affected by this, and they're fighting very hard on this. And I think it's hard for any Fed chairman to really have a material impact on the outcome of that debate.
And bottom line for investors looking at Bernanke talking about asset bubbles and interest rates, any change here?
No, I thought, especially if you take Bernanke's and Cohen's speeches together, there wasn't a lot of guidance on where interest rates are headed in the near term. But I think that you have to assume that you have to read those speeches as suggesting that nothing's going to happen anytime soon.
And not anytime soon. Not first quarter, not second quarter.
I think that the Fed is likely to raise interest rates in the third quarter. And I think, given how far away that is, that's still 6 months away at the earliest. It's hard to be very specific on that. I think that probably the important action for the financial markets, even more than the rate hike, will be when they change the language, the guidance they're giving the markets on interest rates. Right now, they're promising to keep interest rates more or less at zero for an extended period of time. When that extended period phrase gets dropped is probably when markets start to react, and risk assets will probably perform more poorly when that happens. And I suspect that's a second quarter event. And again, so not anything anytime soon.
Tom Gallagher, thanks so much for joining us.
Thank you.
Still ahead on the program, can Google do for mobile phones what it's done for web searches and online advertising? The tech titan gets ready to lift the curtain on its own smartphone.
Tom, as you've heard me complain, it's so very cold here in New York, so I'm not surprised that that's a theme that you're going to be looking at in your market focus tonight.
Yeah, absolutely. That cold snap that's really gripping much of the country, Susie, pushing around energy, even orange juice prices. Plus, we're going to talk about betting on China and some new highs today for the first of the year for some big tech names in our market focus. But that Arctic cold air gripping much of the country here, sending energy prices up to prices not seen since October. Energy also getting a boost, certainly from today's better than expected manufacturing numbers we told you about earlier. So let's take a look at some of the numbers. Crude oil jumping to over $80 a barrel. In addition to the cold weather, a weaker dollar may have helped out. Also, a breakout over 83 for oil would take it to post-recession highs. Nat gas also catching fire with this cold snap, and with the freezing temps reaching down into Florida, even orange juice futures jumping, but ended with only about half of the gains seen earlier in the day. Watch those OJ prices, by the way, as futures have doubled in the past year. Well, speaking of the surprise rise in manufacturing activity, fueling some hope maybe that the job picture finally may be seeing some improvement. The December jobs reports are due out on Friday, of course, and the jobs gains are expected to be seen again in temporary workers, as has been the case over the past 4 months. Now, the temp hiring stocks are already moving, maybe in anticipation. Stocks like Manpower, Robert Half International, Kelly Services seeing a nice bid today. Spherion also moving higher by better than 8.5%. All these stocks hitting multi-week highs ahead of those Friday's jobs data. Well, early on here already, just one day in, 2010 looking a lot like 2009, with last year's leaders helping push the market indices higher. Information technology, the single best performing sector throughout all of 2009, and the big guys continue to hit some prices not seen in really about a couple of years. Take a look at some of these longer term charts, 2 years long here on Cisco, breaking out to the upside on this first trading day of the year, running after $25 a share. A price not seen since the summer of 2008. Volume also stronger than normal on today's move higher. How about Microsoft? Another 2-year chart here. Buyers continues to find buyers over $30 a share. Today's buying takes Microsoft to a level shareholders haven't enjoyed in 2 years. And the rally in these stocks is helpful for many growth mutual fund investors, as these stocks tend to be very popular with those kinds of mutual funds. Intel also getting in the act, jumping to its highest price since October. Brokerage firm Baird upgrading it, calling Intel a, quote, value and defensive idea, and continuing to echo the idea that businesses will be buying new computers in 2010. Now, the action in these 3 stocks comes really just a few days before the beginning of the big Consumer Electronics Show, which spotlights tech trends in the making. Speaking of which, watch Apple stock as the Wall Street Journal tonight, quoting sources, saying the company will unveil a long-awaited tablet computer at that convention. Could measure 10 to 11 inches and ship out in March, around $1,000. Apple stock over $214 a share, $214 is at all-time highs. With the market breaking out to these post-recession highs, some market-leading sectors have seen mixed performance. Thanks to that Intel move, the Semiconductor Exchange Traded Fund leading the way for technology above the range in December. The economically sensitive transportation ETF, however, remains below new highs, perhaps kept in check a little bit by oil. Financial stocks also turning up, but remain well below their October highs. Betting on gaming in the new year. How about this? A couple of gambling stocks see big buying volume today. Las Vegas Sands jumping more than 9% on twice average daily volume. UBS thinking the stock should see $20 a share in the next year. It also raised its rating on Wynn Resorts, and that stock responded up on bigger than usual volume. The target price here, $76. Now, the analyst likes both casinos based not on what happens in Las Vegas, but what could happen in Macau, China. While Vegas revenues are predicted to be flat, UBS thinks gaming in Macau is tracking better than expected, and that's our market focus tonight.
Could Google have iPhone envy? Well, that's a question the tech blogs are asking tonight as we wait for an announcement tomorrow from the internet giant. Google is expected to unwrap its own entry into the smartphone market, but as usual, exactly what the company is up to is less than clear. Scott Gervey reports.
The Google phone is one of the worst-kept secrets in an industry that doesn't keep secrets very well. Since the website Engadget got its hands on what Google is calling the Nexus One, editor-in-chief Joshua Topolsky says the response has been extraordinary.
The action about this phone has been kind of insane. It's been phenomenal. And since we put up our hands-on post, there has been an enormous amount of traffic with people coming to the site to see those pictures and to hear what we have to say about the phones.
The big question Google will face at tomorrow's unveiling is why? Google's Android operating system already appears on scores of phones, including the Motorola Droid, recently introduced by Verizon Wireless. The Nexus phone does not appear to make any major improvements on the Droid, and Gene Munster, technology analyst at Piper Jaffray, says Google's unknown motives are alarming the industry.
If they put out a phone and shows all the good things that Android can do, I think their partners would be happy to see that. If they come out and actually try to grab market share and aggressively price this, I think it's going to create quite friction, a high level of friction between all the players in the market.
Rumors about Google's marketing plans have industry blogs on fire. Price points range from $500 to free. T-Mobile may offer the phone packaged with a 2-year contract for $200. Sales of conventional mobile phones have been dropping since the economy tanked, but Apple's iPhone has remained a strong seller throughout the downturn. And Michael Gickus of Consumer Reports says interest in smartphones is jumping as the economy recovers.
Sales of smartphones keep going up, and the number one reason is people want these extra features, and they're going to pay more for them too, not just for the phones, but they're going to be paying higher monthly premiums for data plans and text messaging and all sorts of other things.
The Google phone is said to run only on GSM networks. GSM is frequently found in countries overseas, but in the United States, this means the Nexus One will only run on the T-Mobile system. Scott Garvey, Nightly Business Report, New York.
Here's what we're watching. Here's what we're watching for tomorrow. We'll get a look at the health of the housing sector when the National Association of Realtors releases pending home sales for November. Factory orders for November will be released as well. Also, we'll see how U.S. automakers fared in December and hear from some car dealers for their take on what will drive the auto industry this year.
Taking a look at stocks of interest to Florida investors, another strong day here clearly, although not for American Airlines parent company, slightly lower only by a penny, but Ma Bell, AutoNation, Brown & Brown clearly moving higher along with the broad market. Other Florida stocks of interest, Burger King, Carnival, Citrix Systems, CSX, the railroad giant, all moving higher in a strong day of broad-based buying across Wall Street. Disney, however, bucking the trend, moving just slightly lower. However, Dycom, Elizabeth Arden, FPL Group, all in the green today on this first trading day of the year. Fresh Del Monte, the Geo Group, Hackett Group, Harris, all moving higher by better than 1.5% as a group. Clearly lots of green on the screen. Even homebuilder Lennar seeing a higher bid today ahead of its earnings call due later in the week. Mednax bucking the trend off by less than 0.5%. Office Depot unchanged on this board. However, again, lots of green on the screen, ranging from Motorola to Royal Caribbean, higher by better than 2%, those two stocks alone. Ryder Systems, SBA Communications, Tech Data moving higher. Tico Energy seeing a slight offer in the market, moving weaker by 0.8%. United Technologies, Watsco, Winn-Dixie, World Fuel, all moving higher, more green on the screen. Financial stocks, Bank of America, the CEO, Brian Moynihan, thinks political pressures to break up the nation's bank is a mistake. Other financial stocks of Florida interest also moving higher on the day, including SunTrust and Wells Fargo, again in a day of broad-based buying.
Tonight's commentator thinks we'll see a better economic reality in 2010. He's Mark Zandi, chief economist at moody'seconomy.com.
For the first time in a very long time, I'm able to say that I'm optimistic about the economy's prospects. 2010 won't be a great year. That would be inappropriate given that unemployment will likely remain in the double digits through much of the year, but it will feel pretty good after what we've been through. Job growth is set to resume in the next few months and will be strong enough to meaningfully bring down unemployment by year's end. This optimism is based on the belief that the Federal Reserve will not raise interest rates anytime soon and that the Obama administration and Congress will provide more temporary help to unemployed workers and hard-pressed state and local governments. A stronger global economy and softer U.S. dollar will also fuel a revival in export growth. Selling what we produce to the rest of the world will be the principal source of long-term growth, and this growth driver will kick in this year. While the economy will make its way back this year, it won't come roaring back. Businesses are no longer panicked, but they remain cautious and will be slow to hire and to invest. A lack of credit is weighing heavily on those small businesses so vital to the job machine. The ongoing foreclosure crisis also threatens to push house prices even lower. The wrongs that led to the financial crisis and Great Recession are being slowly righted. With a bit more help from policymakers, the current recovery will evolve into a self-sustaining economic expansion in 2010. This is Mark Zandi.
Well, it is a new year, and as you have seen in this broadcast, we have some new features here at Nightly Business Report. So let me show you around our new home base. It's called a virtual set, and chances are you've seen them before. This one was created by our graphic artists and is controlled by a system of computers. If you were here in the studio with me, you'd see I'm actually standing on a big green backdrop. The set and other elements are added in our control room. Now, moving to this type of electronic setup lets us give you critical analysis of news stories, stock market information, and data in new ways. It helps us make information visual, more interesting, and easy to see at a glance. And it also helps you connect with our content in a clear and concise way. So while there may be fewer stock quotes, there will be more analysis. There it is. Beautiful. Hopefully you find it beautiful as well. And Susie, clearly the presentation has changed. Some faces have changed, but some things will never change here at NBR.
You look really good against that green background. Yeah, you're right. You know, the good stuff and the important stuff is still here. Same mission that we've had for the past 30 years. We want to educate and empower you, our viewers, so that you can make better financial decisions. So keep watching.
And it's great to start out on a day with the Dow hitting new 15-month highs. How about that?
Hey, we'll call it the Tom Hudson effect.
Yeah, right. Okay, you'll be about the only one that calls it that. Maybe you and my mom. All right, that is Nightly Business Report for this Monday, January 4th. I'm Tom Hudson. Good night to everybody, and good night to you too, Susie.
And good night to you, Tom. I'm Susie Garrett. Good night, everyone, and we hope to see all of you again tomorrow night.
Nightly Business Report is made possible by
Investing takes perspective. It comes from navigating up and down markets for 60 years, spotting opportunities at home and abroad. Global investing from Franklin Templeton Investments. Gain from our perspective.
and by ExxonMobil. This program is made possible by contributions to your PBS station from viewers like you. Thank you.